Hello everyone, welcome back to AK Next Gen Vibes. In this video, we are going to understand pacs.004, payment return in ISO 20022. We'll see when pacs.004 is used, how it works in a cross-border payment flow, how it differs from pacs.002, and most importantly, what happens when funds need to be sent back after settlement. So let's begin. Imagine a payment has already been sent. Customer A initiates the payment through Bank A. Bank A sends a pacs.008 message to Bank B, and Bank B receives the payment for customer B. But then something goes wrong. Maybe the beneficiary account is closed, maybe the payment cannot be credited, or maybe another issue is identified. So what happens if the funds need to be sent back? That is where pacs.004, payment return, comes into the picture. The key point is simple. pacs.004 is used to return a payment that has already been settled. pacs.004 stands for payment return. It is an ISO 20022 message used by a financial institution to return funds received through an earlier payment transaction. Think of the flow like this. Original payment is sent. Funds are received or settled. A return becomes necessary. And then pacs.004 is generated. pacs.004 belongs to the PACS message family. And PACS stands for Payments, Clearing, and Settlement. Let's place pacs.004 inside the overall ISO 20022 lifecycle. The customer initiates the payment using a pain.001. Then, between banks, we normally see messages such as pacs.008 or pacs.009. The status of that payment may be communicated using pacs.002. And if a previously settled payment needs to be sent back, we use pacs.004. So you can remember the flow like this. Pain.001, initiation. pacs.008 or pacs.009, interbank payment. pacs.002, status. pacs.004, return. Let's take a simple example. John wants to send 5,000 euros to David. John gives the instruction to Bank A. Bank A sends a pacs.008 interbank payment to Bank B. Bank B receives the payment for David. But then Bank B determines that the funds cannot ultimately be retained or credited as intended. So Bank B now needs to send the money back. The return flow becomes Bank B pacs.004 Bank A, and the 5,000 euros are returned. That is the basic purpose of pacs.004. There can be several reasons why a payment needs to be returned. For example, the beneficiary account may be closed. The account details may be incorrect. The beneficiary may not be able to receive the payment. There may be a regulatory or compliance-related reason. The payment may be a duplicate, or another processing issue may require the funds to be returned. But there is one important distinction. A return is not the same as a reject, and that difference is very important in payment processing. Let's make this very simple. A reject means the payment is not successfully processed or settled. The transaction does not complete normally. A status or rejection may be communicated using pacs.002. So think, reject equals stop. Now compare that with a return. A return happens after the payment has already been settled. The funds now need to travel back, and pacs.004 is used for the payment return. So think, return equals send back. The memory trick is reject, don't process it. Return, send the funds back. Now, let's look at the message flow. The original payment flow is debtor agent, pacs.008 creditor agent creditor. This is the forward direction of the payment. Now, if the receiving side needs to return the funds, the direction reverses. The return flow is creditor agent, pacs.004 debtor agent. So the key visual idea here is the reverse direction. The payment originally moved from the debtor side toward the creditor side. The return moves back toward the original sending side. After that, the debtor side bank handles the returned funds according to its internal processing. A pacs.004 return cannot simply be treated as a completely unrelated transaction. The return needs to be linked back to the original payment. That is why pacs.004 carries information that helps identify the original transaction. For example, the message can carry original references and transaction details. This linkage is extremely important. It helps with reconciliation, tracking, investigation, and audit. So whenever a return comes in, the bank needs to understand which original payment does this return belong to. That is a critical part of pacs.004 processing. Let's now look at some of the important information inside pacs.004. First, we have the group header, GRPHDR. This contains message-level information. Then we have original group information, ORNL GRPNF. This is used to reference the original message. Next is transaction information, TXINF. This contains details of the returned transaction. Then we have the returned interbank settlement amount, RTRDINTRBKSTTLMEMT. This represents the amount being returned. And finally, we have return reason information, RTRRSNNF. This explains why the payment is being returned. So pacs.004 does much more than just say, send the money back. It carries structured information to identify, link, and process the return correctly. ISO 2002 uses structured return reason information. This is important because banks should not depend only on free text explanations. Common categories of return reasons can be related to account issues, incorrect information, regulatory reasons, duplicate transactions, or beneficiary and customer-related issues. The benefit of structured reason codes is automation. Banks can use those codes to route, process, investigate, or reconcile returns more efficiently. For any specific code used in production, always refer to the applicable ISO 20022 or CBPR Plus usage guideline because exact implementation rules can vary. A return does not always have to represent the entire original payment amount. Let's take an example. Suppose the original payment was 5,000 euros. In a full return, the entire 5,000 euros is sent back. But in a partial return scenario, maybe 500 euros is returned. The returned amount is represented in the pacs.004 message. However, whether partial returns are permitted and how they are handled depends on the applicable scheme, market practice, or bilateral rules. So, the message structure supports the returned amount, but the business rules still matter. This is another very important interview question. pacs.002 is a payment status report. It tells you what happened to the payment. For example, whether the payment was accepted, rejected, or processed according to the applicable status. So pacs.002 is mainly about information or status. Now compare that with pacs.004. pacs.004 is a payment return. It is used when the funds need to be sent back. So the easiest way to remember the difference is pacs.002 equals status. pacs.004 equals return. One tells you what happened. The other carries the actual payment return instruction and information. Now, let's compare a return with a recall. A return means the receiving side sends funds back using the applicable return process. A recall or cancellation request is different. In this case, the sending side requests that an earlier payment be canceled or returned. The key point is, a request to get money back is not the same as the actual return of funds. A recall starts the recovery process. A payment return completes the movement of funds back. This distinction becomes very important when we start learning cancellation and investigation messages. Now, let's connect pacs.004 to CBPR Plus. In a cross-border payment, we can have Bank A SWIFT/FIM plus Bank B. For applicable CBPR plus payment return flows, pacs.004 is used as the ISO 2002 payment return message. But there is an important point here. CBPR Plus does not simply mean use any ISO 2002 message however you want. CBPR Plus usage guidelines define how the message should be used in the cross-border banking context. They specify business rules, required data, validations, and market practice. So not every pacs.004 implementation in the world will behave identically. The applicable usage guideline matters. Now, let's look at the migration from the legacy MT world to ISO 20022. In the traditional SWIFT MT environment, return processing often relied on payment messages combined with return-related conventions, additional information, or market practice. With ISO 20022 and CBPR Plus, pacs.004 provides a dedicated and structured payment return message. This is important because pacs.004 should not be viewed as a simplistic one-to-one replacement for one MT message. The real improvement is the move toward structured data, clear original transaction, references, better automation, better reconciliation, and more consistent processing. So the migration is not only about changing the message format. It is about improving the quality and structure of payment return information. Now, let's look at what happens inside a bank when pacs.004 is received. First, the bank receives the pacs.004 message. Then, it validates the message. Next, it identifies the original transaction using the references carried in the return. Then it reads the return reason. After that, the bank reconciles the returned amount against the original payment. The payment status is updated. The required accounting entries are posted. And finally, the customer account may be credited and the customer may be notified, depending on the applicable process. This is why pacs.004 is important not only for payment operations teams. It is also relevant for business analysts, developers, testers, product owners, and core banking teams. Let's quickly review some common interview questions. What is pacs.004? It is the ISO 2002 payment return message used to return funds from an earlier payment transaction. When is pacs.004 generated? When a previously processed or settled payment needs to be returned. What is the difference between pacs.002 and pacs.004? pacs.002 communicates payment status. pacs.004 handles the payment return. What is the difference between reject and return? Reject means the payment does not complete successfully. Return means the payment has already progressed or settled, and the funds now need to be sent back. How is pacs.004 linked to the original transaction? Through original message and transaction references carried in the return message. Can a return amount be different from the original amount? Depending on the applicable scheme and market practice, the returned amount may differ, including in supported partial return scenarios. How does pacs.004 fit into CBPR Plus? It is used for applicable cross-border payment return flows under CBPR Plus usage guidelines. Let's summarize pacs.004. pacs.004 equals payment return. It belongs to the payments clearing and settlement family. Its purpose is to return a previous payment. Its direction is generally back toward the original sending side. It carries references to the original transaction, and it contains important information, such as the returned amount, the return reason, and original payment references. And remember, pacs.002 equals status. pacs.004 equals return. If you remember this difference, you already understand one of the most important concepts in ISO 20022 exception processing. So that was pacs.004, payment return. In the next video, we'll go one step deeper into payment exceptions. We'll understand reject versus return versus recall, and what actually happens when a payment does not go as planned. If you work in banking, payments, SWIFT, ISO 20022, development, testing, business analysis, or payment operations, this is an important topic to understand. Subscribe to AK Next Gen Vibes for more practical banking and payment technology content. Understand payments. Understand banking.